Elon Musk is possibly selling Tesla stock today because when we look at everything, that is one of the very likely conclusions. This is not confirmed, so this is just speculation as it is right now. If this changes in the next few hours or tomorrow, I will update the title of the video. If you just look at the markets, Nasdaq is up almost 1% today, and S&P is up a little bit over 1% today, and Tesla stock is down a little bit over 1%. Of course, if you look at 5-year period, we're still up about 10 times. Wedbush analyst Dan Ives, who we love as a Tesla stock bull, who has a price target for Tesla stock of 360, on Friday, just a few days ago, said that Elon Musk would be forced to sell $5 to $10 billion in Tesla stock to prepare for the Twitter deal completion. We will soon find out exactly what is going to happen because the deal currently has a deadline of October 28. In just a few days, it should be all done. We'll see. Dan describes the situation as brutal for Tesla stock investors, but for me, really, this is another buying opportunity. I am accumulating, so any short-term pressures on Tesla stock to go down, I love those. However, long-term, of course, I'm looking what is going to happen long-term, but here, I only see short-term issues. So me, as an all-in Tesla stock investor, I am not concerned at all. However, let's double check if there's any good reason that Tesla stock could be down because of the price cuts of in China. So here Gary Black says that we did have multiple price cuts for Model 3 in China. So between January 2020 and July 2021, Tesla cut Model 3 price 3 times by a total of 21%. That's not a small cut. And of course, during that time, we know what happened to Tesla. Now, this is, I don't know, I wouldn't say that this is exactly a very fair time to compare if how much of an impact this would have on Tesla stock, because, you know, during that time, everyone realized, oh, Tesla is actually going to be quite a company. However, what is clear is that the price cuts are definitely increasing demand. We see here that Tesla site was down temporarily, which clear sign. That's a clear sign that there's definitely going to be a lot more orders coming in. It doesn't seem like there are any problems with the website anymore, and definitely not outside of China, at least. I'll show you in just a moment the main reason why I think the price cuts did not affect the Tesla stock price. But first, I just want to show you this from a Electrified YouTube channel. Dylan has done a great job here breaking down the changes in pricing in China. And if you look right here, you will see the change in price when we take into consideration recent price cuts that just happened. And we will see that the change since the beginning of 2022, basically overall, there is still a net increase in pricing of Tesla vehicles in China. So these price cuts, simply we are going back to price levels that we had in the beginning of this year. And there's another incredibly bullish thing that I will cover in just a few moments. First, let's finish up with why I don't think Tesla stock would be down because of price cuts. If we listen to Gary, he says that volumes drive Tesla stock far more than auto gross margin. And here is why that's important. You see, earnings per share, if you just follow Gary's projections of an increase of 40,000 deliveries, earnings per share would increase by, let's say, 5 cents in this scenario. Wall Street does not look at production. We, retail Tesla stock investors, we only look at production because we know Tesla will sell every single vehicle it produces. However, Wall Street does not look at production because Wall Street is concerned about long-term demand. So the reason why there would be an increase, because some of us retail investors might be thinking, what do you mean an increase? Doesn't Tesla already sell every single vehicle that it makes? True. Remember this. We exported a lot of cars to other countries from China in this last quarter. And those cars were in transit. So technically they were in Tesla's inventory. Now, all of those cars will be delivered in Q4. But now, because the demand is going to come back super strong for inside of China, Tesla is likely to perhaps maybe even sell every single car that Tesla makes within China, sell those cars to the Chinese market, which would mean that inventory levels at the end of Q4, if this comes true, would be very, very low, and all those sales, all those deliveries will appear on the financial statement, therefore increasing earnings per share, which Wall Street loves increased earnings per share. They love numbers that show up in profits. They don't care about production. Also today, we didn't see any analysts really updating their price targets downwards. We do have one adjustment from Morgan Stanley by Adam. Here, the price target has been cut down from 350 to 330 base case. The bull case is still the same. However, it has absolutely nothing to do with the price cuts. If you read here, this is completely within expectations, and I don't think the stock is down because of the price cuts. Pretty much everyone seemed to have already expected that. And here is the biggest reason why Tesla stock investors shouldn't be concerned about these price cuts. Tesla told Reuters it was adjusting prices in line with costs. Capacity utilization at its Shanghai Gigafactory has improved while the supply chain remains stable, which is good, despite the impact on the economy of China's stringent zero, fill in the blanks. I can let you read this one for you. I don't want my channel to get in trouble. Leading to lower costs, it's said. So, this is why I invest into Tesla stock, because of innovation, because Tesla has so many tricks up its sleeve still that it can implement and will implement to reduce costs and therefore maintain margins as the prices of the vehicles are coming down. How ridiculous is that? You are reducing prices while the margin stays the same, or it would be quite mind-blowing if margins even continue to increase, which is not out of the possibility. We are still a long way to go before we implement all of the innovations we know about the front body casting and the rear body casting. Here's some new pictures that just came out. This is just so nice to look at. This is what sexy means if you are a little bit of a nerd. And then we have some news that Tesla could be opening a gigafactory perhaps in Mexico. Check those pictures out. So that's Mexican state officials, including governor and his wife, were both seen. So what do you think that drink means right here? They look pretty involved in important discussions to me about possibly a gigafactory. Tesla is considering a plant near in fill in those. I'll need to maybe practice on spelling those names next time. Just know it's in Mexico. And this is where I want to talk just a tiny bit about Tesla stock buybacks. You see, everyone says, those who are for the buybacks, that if you do a buyback, it's only after all of the growth initiatives are funded. If you really think about it, what are growth initiatives? To someone from Wall Street, growth initiatives means we scaled our existing products and we are not innovating. To me, growth initiatives means the moment we are not innovating, or we don't have any crazy new, potentially revolutionary products coming out that we are working on. Once that is over, we want to find new ways to revolutionize the industry again. And then if you do that again, I want to revolutionize the industry yet again. And then again, and then again. Because we have Elon Musk, the world's #1 innovator. I don't really, at this moment, and I might change my mind at any time, by the way. I'm very open to ideas. But right now, still, Tesla, I see it at such an early stage, relatively speaking. And I see so many opportunities for Tesla still. I mean, why couldn't we build like 6 gigafactories at the same time? I know it would be incredibly challenging, but hey, look, Elon is running multiple companies at the same time, and he's going to add Twitter now. Are you telling me Elon Musk does not have a capability to build, let's say, 6 gigafactories at the same time? I understand building 6 at the same time would not be as efficient as just building, let's say, 2 or 3. I understand that. But we look at Tesla's margins, and they are preposterous. And what really matters long term, in my deep conviction, is full self-driving. And before we have full self-driving, we want to maximize the number of vehicles on the road, because the moment we solve full self-driving, we won't have 100 million cars on the road in just one day like that. We need to still manufacture those. But if full self-driving skyrockets the margins immediately, even for already sold cars, this is something to really think about. Even if Tesla sells all the cars and no one buys full self-driving right now, the moment it is sold, do you think most people will not buy full self-driving for the vehicles that they already purchased? I think they would buy full self-driving because they would look at their financial statements, projections of full self-driving. Okay, so if I turn on full self-driving, how much money can I make? You mean the car would make the money back, but I paid for the whole car in like 1 or 2 or max 3 years? You know, I'm getting full self-driving, I think, is what every rational person will say. Of course, we know not every person is rational. So that's a little bit up for discussion, but that's a whole different subject. So on this, I would have to respectfully oppose Gary in terms of buyback. I think the buyback is more of a political issue for Tesla here. It's not really factual in terms of what is a growth initiative is what we would have to answer. And I think pretty much every single person will have a different definition of that, because some people would just want Tesla to make cars. Some people would maybe also would want Tesla to get into Tesla Energy, and that's where we would limit the growth initiative. Then other people would also, of course, like Tesla to solve full self-driving. And then other people would never want to fund the Tesla bot. So where do we put, for example, the Tesla bot when we are talking about growth initiatives? And where would we put building extra gigafactories when it comes to growth initiatives? And how many at the same time can we build? Like, where do we limit that? That's all up for debate. This is not a cut and dry numbers problem. So currently, and I might change my mind at any time, but currently, I would like Tesla to build up its cash pile further and spend all that money as much as they can, as fast as they can, on productive growth initiatives. For example, building that gigafactory in Mexico. I would love to see that. Another one in Canada. We're looking into it. I would love to see those announcements and then those projects being moved forward. These are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Pocius, and I will see you in the next video later today. Thank you so much for watching.